Hello, my friend. How are you? I'm so happy to see you again. Of today, which is 19th of August 2025. Today is a profitable day and very beautiful, and I will explain to you how we are trading, and this will help you very quickly and very rapidly to learn from trading. As you can see, and we are explained it before, there was a breaker block daily, which is this breaker block daily, and this wick is not included in this breaker block because it doesn't coalesce with fair value gap. So we will choose the only body of the candles. So there is a breaker block daily, and there was a fair value gap daily, which is bearish, and also there was a fair value gap daily bullish with a breaker block daily also bullish. And also we can see that there was on Monday there was the high of the day. This is the high of the day of the previous day, high of the day. Okay, and this is the law, and this is the law of the day. As you can see, this is the law of the day. This is the high of the day, and this is the law of the day. How we are trading today, I will show you here. We are here on H4. When we change it, sorry, when we change it from H1 daily to the H4, you can see that there was a fair value gap here. That there was a fair value gap here, and this fair value gap is H4. H4 fair value gap, and also the price make a change in the state of delivery. If you can see this, this is a change in the state of delivery, and the price then returned to retest this area. When the price retest this area, it make multiple rejection from the above and rejection from below. So there was indecision, but but I as I told you before, as I told you before, that this indecision is more likely to be bearish. Why? Why? There is something very important which is you should be noted. This is the fair value gap on H4, and there was also another fair value gap, which is the IFVG, inverted fair value gap. So there was two fair value gap associated with change in the state of delivery. So there was a possibility to move down. That is very important to note it in this in this chart. This is the first. This is the high of the day of the Monday, and this is the low of the Monday. There, this indecision on H4 is um, more likely to go with downward with bearish because of these features present: fair value gap, inverted fair value gap, and change in the state of delivery. And there is no signs that prove that the price would move up. Why? Because there was no fair value gap that pushed the price upward on H4. Between this and this and this and this and this, there is no. And there was rejection from the above and rejection from the below, but we go to the rejection from the above more likely to the rejection from the below because it goes with the buys, because these fair value gap, these change in the state of delivery goes with the buys. This is the first thing. The second thing that most important to note it is the presence of double top. This is the double top. These are double top. I will show you to you again very likely to show you it more clearly. This is R double top. That means there was a possibility to take liquidity from this area. These are double top. These are double top. There was a liquidity here. There was a liquidity here. That's very important. And also, if the price mitigate or sweep this area and pushing downward, what is the target? We have two targets. The first target is the swing of the low. This is the swing of the low. And other swing is the low of the day. This is the second one. So the first target, if we go bearish, this is the 3326, and the second target is a 3323. That's very important to know it and to check it. So when I see this, when I see double top this and the price moving up and then rejected from it, and this is a sign. This rejection is very beautiful from this area and with this liquidity above from the double top. If it is coalesce, this rejection, if it is coalesce with market structure shift on lower time frame, I will go bearish to this target first and to the second target second. So when we change it, this is a rejection is very clearly on H4, but it is a very long rejection. And when we change it to H2 market structure, you can see that there was a change in the state of delivery on H1. You can see there was a change in the state of delivery, and I will show you something which is very important on H2. When change the market on H2, you can see that the price is rejected here, is a very beautiful rejection here. You can see this rejection, this rejection. You can see it. I will change it. I will change it to this time frame. You can see that there was H4, and this is the rejection from the double top. This double top. These are double top. These are double top, and the price sweep this double top and then rejected from it. So this is a rejection block. This is a rejection block. You can see it very clearly. This is a rejection block. This is the first. The second thing, after sweeping, we change it to H1. You can see that the price moving up and then moving down and make market structure shift and make also sorry, but this market structure shift is uh, associated with a rejection from the liquidity sweeping above. So this is the buy side liquidity. So this is buy side liquidity. Okay, uh, and make market structure shift. So this candle become a breaker block because it is an order block that should push the price move and upward, and when we return the price to this area and then push it again. But the price, but the order block failed to push the price upward and moving down and make market structure shift. So this is a breaker block, but this breaker block is in the body, not in the candle, because there is no fair value gap. So there was a rejection block here. This is a rejection block here. It's first. The second thing is the breaker block, and when we change it to 3, the price retest this area, return to retest this area. You can see that there was on 30 minutes there was a fair value gap here and fair value gap here, which is very small, and the price make a market structure shift first and another market structure shift, another market structure shift with this fair value gap, and the price return to this area and rejected from it on 30 minutes. Rejected from it. Why it is rejected? Rejected because of the breaker block. And this order block also. And this is order block. This order block, bearish order block, which is bullish candle. And this breaker block. Okay. You can see that there was also after this breaker block. Okay. And we see that there was just remove this, we can see that there was also inverted fair value gap in this area, inverted fair value gap, and this rejection block. And how what we can see on 15 minutes, on 15 minutes we can see that this is an order block, this is an order block. So, and this order block make a market structure shift inside from the 531 minutes, and the price return to this area. So this area is very potent to be bearish. is very potent to be bearish. Why? Because of the uh, BDRA change in the market structure shift on H4. This BDRA is fair value gap H4 and inverted fair value gap H4 that make the change in the state of delivery. When we change it on H2, we can find that the rejection block that make the market structure shift on H1, 2, and then the price return and make this breaker block, and there was also order block and the price rejected from this area, rejected from this area. When we change it to 5 minutes, you can see we can look for now what we are signs to enter this market. What are the area we will enter? We look for interest in this area, in this retracement. We will look for to enter in this retracement. On 3 minutes, you can see that there was a fair value gap. This is a fair value gap. Okay, this is the first. And there was another fair value gap here, followed by another fair value gap here. This is the second. Okay, so we can enter here or here, and stop loss is above this rejection block. We can enter in this area. We can find also there was a rejection, rejection, and on 30 minutes also there's a rejection from this area, and on 1 minute we can see where is the price move. When the price rejected from this area, make a change in the state of delivery or change in the market structure. This is market structure shift. This is the first market structure shift. Sorry, on the bottom. The second market structure shift. Market structure shift. And the price returned to this area, and there was fair value gap here, fair value gap here. This is an order block, and on higher time frame, this is a breaker block, and the price rejected. You can see how the price rejected. Sorry, you can see how the price this candle is rejected from the breaker block, and also on 1 minute you can see how the price move and make on lower time frame market structure shift. You can sell in this area and your stop loss is above, and you can see how the price move. You can see here also there is another market structure shift here and the price return. This is a market structure shift again, and the price return to this area and affected by this inverted fair value gap, inverted fair value gap, and this fair value gap, this inverted fair value gap, this fair value gap. So we can sell here and put stop loss above, and you can see how the price move very quickly and rapidly to the first target. This is the first target, and then move to the more to the low of the day. So the first target is the double bottom that make it. This is the double bottom. The market is targeting this double bottom and then targeting the low of the day. It is very beautiful, and you can make a profit from this area. I want to show you something which is very beautiful also, which is the session. The session on night session, you can see that the price on Tokyo moving upward, and then on the opening of London make a sweep and a rejection. You can see it. There was a rejection. This is a rejection. Okay, and then sorry, on H2, you can see the price on London sweep, and then New York after sweep in London moving down to sweep from the low of the Tokyo. So there was multiple factors that you should enter the market. First, the rejection sweeping from the above Tokyo and trying to sweep from below. So when we change it to also With our features, you can see Tokyo Low, double bottom, sweeping in London, and continuation in New York. That's very beautiful to see it, and you can make if you um, see the price, how to move on higher time frame and lower time frame, looking for BDRA and market structure shift aligned with rejection and other features, you can make money.